Light FM Sting, and the police are there. It's every breath you take. If you smoke, that gets to be a problem sometimes. It's 8:41 now. 19 here before 9. Time to check in and see what Wall Street's doing to your IRA and your 401k this morning. It's going to be a real busy week. This is kind of the last of the relatively quiet days because we start getting government data dumps up the yin-yang starting tomorrow. Let's see what's going on with Phillip Statler from Statler Financial Services, who's on the line this morning. Phillip, good morning. How you doing?
Good morning, Dave. How you doing? Well, today it is Tuesday, and man, yesterday ended up being not such a bad day on Wall Street.
You know, I was honestly shocked by it because I didn't hear any news that really prompted it up. But the Dow was up by 210 points. Standard & Poor's up by 11, which doesn't sound like a lot, but that's a full 0.25%. NASDAQ was up by 25. And the VIX actually fell a little bit yesterday, so it was a planned upswing, I guess, because even the volatility index stabilized a little bit. All in all, I'd call that a win for the day, wouldn't you?
Yeah, I would too, based on what we started to see at the morning time. So that's good to start off the week in green territory. The question will be as we start to see some earnings come through and economic numbers start to hit this week, can we maintain that green ink?
And that's going to be the big kahuna number for the week as to what goes on. All we've got this morning in terms of market-moving government data dump is actually some relatively good news. The National Federation of Independent Businesses introduces their Small Business Optimism Index. And, okay, fine, it's a sidebar type report, but any good news is good news, and I gather businesses feel a little bit better right now than they did 6 months ago.
It was good. The number that came in was like a 91, which was, a little bit above expectations, not much, but I guess the real relevant point is that it's a 7-month high for that index. Yeah.
And that's good news that at the very least the people we're buying from are optimistic we're going to buy more from them. Kind of throw out the other side of that coin. One of the announcements came out this morning. And once again, when you talk about bad news for individuals, this could be good news for the Federal Reserve. Microsoft announced they're going to cut a whole pile more jobs out of their workforce, that after the 10,000 layoffs they announced in January. So the employment market is starting to show signs of softening just a little bit. And again, this is anecdotal, but it's what the Fed's looking for when they make their interest rate decisions in a week or two.
It is, and that's that's going to go to those first-time claims once they actually pull the trigger and lay those folks off, and that's one of those numbers that is looked at by the Fed.
Absolutely. Now the big Kahuna day is going to be tomorrow because tomorrow we get this is going to be the Consumer Price Index for month-over-month figures from June. They're expecting a little acceleration, according to my sheet. We were 0.1% last month. They're expecting 0.3% interest in the CPI report tomorrow. And I'm looking at that and saying, why is the market so happy? Because if that actually happens and we actually accelerate a little bit, then we start looking at interest rate increases more in line with what the hawks are talking about.
Well, I think because overall they're looking at a little different number. So if you look at the core expectations, it was 0.4% last month. They expected to drop to 0.3 this month. And I guess the big difference is probably going to be the year over year number is expected to fall from 4% to 3.1 on the overall CPI.
I was going to say, I'm not sure I know how the math works, how the year over year could fall while the month over month goes up, but I'll take the math and I'll live with it one way or the other.
Yeah, you never know those guys,
It's the government. What can I say? I mean, one thing, we talked about small business optimism. I've got an economist that was writing one of his blog columns that I found this morning saying that if the CPI ends up continuing to show declines, especially the core, and then when we get to the personal consumption numbers, if it keeps going down, based on inflation data, he says he thinks the S&P could surge a whole 100 points this week if things go right.
This week, that would be a big surge for the whole week.
That would start approaching bubble territory, which makes me wonder what some of these columnists smoke in their off hours. But there is some optimism that's floating out there, and it's obviously bleeding over into the economists, and especially given light of what we were talking about yesterday with earnings season on the horizon. The big banks start reporting on Friday. They're expecting, according to FactSet, the Standard & Poor's to end up with like a decline of 7% in earnings year over year. Now, okay, if you do what you say you're going to do and beat the street, that's good news. But the absolute numbers are 7% below last year. I'm not sure I can justify a major league stock price increase for company ABC that does that. Can you?
Yeah, I mean, I agree with you there. I think that we get so narrow-minded when we look at earnings season and how the company performs, is that we don't look at year-over-year numbers. And that's really, you're right. That's what we should be looking at, because that's the profitability number, right? If they're not doing as well as they did last year, then their stock price should be going down, not up. But that, you get emotion in there, and the traders get in there, and it's a different story.
Absolutely, and the traders and the analysts aren't helping a bit. FactSet says that 57% last year, 57% of FactSet's analyst ratings on stock were a buyer equivalent ratings. Only 6% were a sell or equivalent. I mean, even the analysts are at the point of trying to move more stocks one way or the other, come heck or high water. And yet, doggone it all, the primary measure of the value of a company is, to my mind, its price-earnings ratio. How much profit do I buy per dollar I invest in a company? And the number of dollars I buy with an inflating stock number, the number of dollars of profit that I buy is likely to be 7% less this year than it was last year, which means those ratios are going through the roof, everything being relative. And while I'm not cheering for a decline, I would think a plateau would be smart investment right now as far as the overall indexes.
Yeah, I got to think that there's, when they start looking at those numbers, and we'll see, right? When earnings season hits, what happens to the stock price year over year and quarter over quarter, based on what those earnings come out at, and do they, are the traders or investors really looking at how well the company's doing based on the prior year? Or are they just looking at the current information?
And that's the point of concern, because to my mind, anyway, the definition of a bubble isn't where the absolute prices go up. It's when the price-earnings ratio goes out of defensible ranges. That's when you get a bubble, and that's when you start cruising for a bruising, to my mind.
Yeah, and hey, if they keep this trajectory, then that could be a possibility.
And that's a concern, at least on this boy's part. And there's my rant for the day. Earnings season, like we said, doesn't start in earnest until Friday. We'll probably have a couple of household names we'll hear about before then, but the big banks go crazy and dump earnings figures on us en masse on Friday morning. We got a straggler left over from last quarter. An old red-green line saying that if it's supposed to move and doesn't, you use WD-40. If it isn't supposed to move and does, you use duct tape. Well, I don't have duct tape, but WD-40 did report. How are they doing?
WD-40 did report. They beat expectations. Their earnings came in about 16 cents ahead of expectations at $1.38, which was good for them. Their net sales were almost $142 million, as a 15% increase from the prior year. So here we're looking at year over year numbers. So a good number for WD-40, and it's got their stock moving up this morning 5.5%.
That's interesting. I guess there's a lot of things that are supposed to move that aren't. I noticed you talk about home sundries and home tools and whatnot. I just got a little thing there saying 3M stock got upgraded too, another do-it-yourself product that does well. They make a whole lot of stuff that consumers buy themselves to upgrade their homes. So evidently there's a little bit more do-it-yourselfing going on than there is other items.
Yeah, they got upgraded. There was a couple upgrades. You got actually US Bank Corp got upgraded. JP Morgan got upgraded by a couple companies. Zilla got upgraded. So we're getting several upgrades coming up here in earnings, beginning earnings season.
Yeah, all the advance warnings and whatnot, so that we don't surprise the analysts too much, because something you and I've said before, that a big surprise to the upside offers some question as to whether or not management knows for sure what they're doing as well. So they all want to just basically beat the street by a penny or two and make their investors happy at the end of it all.
Well, yeah, and so if there's a big miss or a big overshoot, then you wonder what the analysts were looking at.
Yeah. Re-summarizing things, it was an up day yesterday, actually a pretty doggone good one. Looking at my delayed quotes, I'm seeing some green ink again this morning on the futures. 45 minutes, how we doing?
We are looking really pretty good today, Dave. The Dow Jones Industrial 30 is up about 1/3%. The S&P 500 is up 1/4. NASDAQ 100 is up 1/4%. And the Russell 2000 is up a little over 1/3%. So good news on that front. Silver's basically even from the close yesterday, but the close yesterday was up quite a bit from yesterday when you and I spoke. It's trading about $23.33 today, this morning, and it was down below 23 yesterday. So gold's up about 0.4. Crude oil's up about 0.5% to $73.40 a barrel, which I think is about where it was yesterday.
It's in the same neighborhood. I'm still trying to figure out why the run-up from last week. I haven't seen an article yet that explains it, except for just expectations of increased economic activity.
Yeah, I haven't seen anything related to oil either.
Yeah, it's one of those inexplicables, but I don't like it when the gas price goes up. Overseas markets are kind of seconding our emotion. Asian rim markets were up universally across the board this morning, including some pretty good ones. Taiwan was up by 1.5%. The Hong Kong market up by 1%. It was a good day on the Asian rim. Europe is marginally up. The only outlier is the Great Britain markets. They're off by just a tinge off of inflation news over there, and that's almost flat, 0.03% down. Everybody else is up substantially. Keeping track of retirement funds on a day-by-day basis can drive a person crazy. It takes a plan to be able to make sure you can retire the way you hoped to. How do I find you to get that plan, Phillip?
That's exactly the reason we created the Core Retirement Design, to help people design that retirement they always dreamed of. Give us a call, 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And tomorrow morning, we've got the inflation numbers right here on Light FM at the same time. I'll see you then, sir.
All right, man. Have a great day.
Thank you, Phillip. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that.
Hey, folks, again, I want to thank you for joining us today. Hope your week has got to a great start. Join us again tomorrow for tomorrow's update. Same time, same place. Until then, have a great day.